Welcome everybody to today's Finance Performance Committee meeting on the 18th September. We'll start with the opening karakia. Whakatakata te hau te tikuru, whakatakata te hau ki te tonga, kia mā kina kina ki uta, kia mā tara tara ki tai, ihi aki ana te atakura, hi tio, hi huka, hi hauhu, tihe moriora. Welcome everybody. Today we have a number of apologies. We have enough for our quorum today. We have two online as well. We have Deborah and Shane. And our apologies today are Amir Sam, and Nicole Reid, Lydia and Grant Miller. So can I have a mover for those?
I also have an apology for leaving. I have to leave at 2 o'clock to do the ECAN submission on the representation review.
Okay, we will still have a quorum. That's the main thing. Moved by yourself and seconded by Councillor Mugford. All those in favour will say aye. Thank you very much. Identification of any extraordinary business today? There being none. Conflicts of interest? None notified. Confirmation of the previous minutes. We've had a chance to have a look at those, committee members. If we have somebody who'd like to move those, Councillor Mugford's going to move them. Seconded by Councillor Dean. All those in favour will say aye. Thank you. Committee terms of reference are there for your reference, and we'll move on to the chairperson's report. To item 4. Is there any comment on the chairperson's report or any questions? No questions on the chairperson's report. Can I have a mover and a seconder, please? Move Councillor McInnes, seconded Councillor Dean. All those in favour say aye. Thank you. Now we'll move on to the Chief Financial Officer's report.
Thanks, Malcolm. So just noting, we've got a few papers to present today. Our first one's been the financial papers, draft year end to June, and our July position. It's just worth noting a few things in June. So just now we are showing as a surplus, but noting we do have some adjustments we still have to post. Technical accounting adjustments, tax depreciation, valuations, etc., which Ferrangis and Miller will talk to in some more detail. I think it's just worth noting as well with some of the high-level variances. We've spoken before about personnel costs. We've got the Holidays Act remediation. We've got a 1.5 million accrual in there just now. We're still working through those numbers. This is the high end of what we expect. I'm comfortable holding the number at that level. So that will be full liability in this financial year with nothing spilling over into next. And that was a key thing. Even if we haven't finished a piece of work, make sure we capture the liability in this financial year. Just moving into our July report. So we're reporting a surplus just now. We do have some variances, which again, Ferrangis and Miller can talk to in more detail in development contributions and in subsidies and grants. But we do have some favourable variances to offset it against. Just sort of moving on, just talking a little bit about the annual report. So we've got Deloitte who will come on site on October 14th. We've done a reasonable amount of planning, discussions taking place back and forth with both. One of the issues that we had last year end was planning. So trying to mitigate some of the issues we had last year and get in front of those. We don't have any new changes in accounting standards, whereas last year we did have a change to the Cerberus reporting that caused some delays. We don't have that this year, so I'm comfortable that we're in a good position to get through this audit. And I think the final thing just to note in my report is we've got a presentation later on in the piece today just on the digital strategy that both Matt and myself will talk to, and particularly around the financial hygiene project, what that means and how it's going to roll out. And that was me.
Thank you, Alison. Any questions on the report, CFO's report? I see Deborah has a number of questions which she has sent in previously. I believe, Councillor Hassan, that the answers to your questions are actually contained within the report. Is there anything else you would like to have cleared up?
Sorry, I'm not aware that the tabled document on data, is it database for DCs, it's going to be tabled today. Can I ask a query what part of the meeting it's going to be tabled, because I could not find it in the agenda itself?
Do we have an answer to that, Alison?
Sorry, Deborah, was that the database,
Yes.
the dashboard? Sorry, I thought that had been added. Apologies. If there is an overview on page, sorry, bear with me. I can't get my page numbers in Diligent just now, but it has been added as an overview on, sorry, on page 35 of Diligent.
I think the dashboards were sent out as a separate document, Deborah.
They've also been added in Diligent as well.
So the dashboards were sent as a separate document and they're also been added in Diligent.
Thank you.
Apologies. I thought Deborah's question was around, she was after a breakdown of development contributions.
Yep, so Deborah, on page 34, in the bottom right-hand corner, there is a table in there. Admittedly, this is quite small, but we've got the breakdown of DCs between the areas that was what you'd requested from the last meeting. So we've got Ellesmere, Malvern, Rolleston, and a breakdown of the activities along the left-hand side.
Okay, because I do have a query on how to interpret that breakdown. Is it best to ask it now?
Would you want to hold that until we go through the finance paper?
Yeah, I'll go through the finance paper, but I do have a question on how to interpret it. Thank you.
Okay, thanks.
Okay, any other questions, councillors?
Is now the right time? I wanted to talk about page 26 on revenue. Do you want me to wait or do it now? Yeah.
If we can hold that one for the finance paper as well, we can talk to that in more detail. Thanks, Elizabeth.
Okay, thank you. Okay, so that is the CFO's report. Can I have a mover and a seconder for that report, please? Councillor McInnes, Councillor Dean. All those in favour say aye. Thank you. We'll now move on to the finance and performance report.
Thanks, Malcolm. I will hand over to Miller and Ferranges to talk through the reports in more detail.
Thank you. Kia ora koutou katoa. Firstly, we will discuss the financial and operational performance as at the 30th of June 2024. We'll begin with going through the dashboard. That was the supplementary paper to this report, and I understand is now uploaded onto Diligent. That was distributed also to the councillors prior to this meeting. The dashboard follows the same format as the one presented at the last finance and performance meeting, with an addition of the development contribution actuals being split by ward and by activity, as seen in the bottom right-hand corner. The dashboard metrics are based on the traffic light system, where the results were adverse to budget. The cells are highlighted in red. And conversely, where we did well against the budget, the cells are green. At a glance, it indicates that the revenue numbers are behind budget. Equally, there is a saving on the expenditure side. However, as already mentioned by Alison, there are still some adjustments to come through as we finalise the annual report. Therefore, these numbers should be taken as draft position at the time of writing the report. We will now move on to the walkthrough of the information presented in the report itself. For the period ended 30th of June 2024, the total of Council's net comprehensive revenue and expenses are 21.4 million, which is unfavourable to budget by 0.9 million. The key drivers to these will be discussed further on. The Council's capital investment in assets and infrastructure totals 95.8 million for the same period. The capital projects report will provide further detail on that. If we talk about the revenue to begin with, first thing to note is vested asset revenue, as already mentioned by Alison, has not been recognised yet for the year, and that is due to the annual report still being finalised. Please also note the tendency in the vested asset revenue to decline year on year, and that is related to the vested assets held by the council also declining, so that's a direct correlation between the two. Please also note that vested assets have been previously included in the full-year budget under the other revenue, but now it's split out in this iteration just for clarity. This is a non-operating revenue item, and it will not be included in the future reports when we present the FMP reports in the future. So if we talk about the other components, the majority of the items were favourable to budget. General rates, for example, were favourable by about 0.8 million, which is an increase compared to last year's total, and that is mainly due to the growing population of the Selwyn district. Same theme continues on with the targeted rates and rate penalties. Rate penalties generally are budgeted at a roughly 4% of the total of targeted plus general rates. The actual penalty rate that applies is governed by the rates resolution that is adopted annually. This is also governed by the Section 57 of the Local Government Act 2002, and that allows the maximum of 10% to be imposed. Noting that the only time we've ever had penalties at 10% in the rates resolution, that was in the post-COVID year, and since it was kept at 5% year on year. Further, we also have development contributions that are tracking favourably to budget by 3.88 million. It is a slight decrease compared to last year's total, but that relates to the additional reserve contributions collected. Subsidies and grants, again, it's a favourable variance. It is an increase compared to last year's total of 13.5 million, and that is mainly to do with NZTA subsidy funding. Fees and charges were 34.2 million for the year, which is a favourable variance of 7.1 million, and that again is an increase. The majority of these were made up by additional dumping fees, Selwyn Aquatic Centre, resource consent fees, and additional corridor access and traffic movement charges. We also have seen increase in the investment revenue, which has been favourable to budget by 2 million. It's a slight increase compared to last year, and that is to do with our investment entities performing better than expected. For example, the Orion dividend that was received, it was 1.3 million higher than budgeted, and same theme continued with the Court dividend, which was received at 800,000 higher than budgeted. Other revenue was unfavourable to budget by 1.4 million. It is a decrease compared to last year's total of 0.4, but that is primarily due to the petroleum tax revenue being lower than budgeted. We've also seen a slight movement adverse to budget in other gains and losses, and that is to do with the valuation of interest rate swaps. That's just because of the sharp movement in the interest rates, as we have all seen with the OCR rates and what the market has been doing in the lead up to the financial year end. We'll now move on to the expenditure side of the report. We can see that the major drivers, even from the dashboard where we have the metrics, you can see the major ones, and they are the personnel costs. As explained, again, the majority of that variance is to do with the holiday pay accrual, which is at 1.5 million. We have accrued it all in the 2024 year, and it is on the conservative end of the spectrum. We can also see the elected members' remuneration that has been tracking unfavourably to budget, very, very slight increase compared to last year's total. Maintenance expenditure, again, it is an unfavourable variance with an increase compared to last year's total of 43.4 million, and the main overspend was in traffic service maintenance and general works. We've also seen a slight adverse variance in the consulting, legal and professional services. Most of the overspend was consultants in various areas, followed by audit fees. We've also seen a slight offset in the legal and valuation services that were underspent to budget. Overheads were 9.2 million for the year. Again, that's an unfavourable variance to budget. and a decrease compared to last year's total of 7.2. So we have done better than last year, essentially. The overspend was mainly on insurance and electricity, and that is just the general theme of increase. There's just a price increase for those services. The other expenditure was unfavorable to budget by 10.4 million, and that's a decrease, yet again, compared to last year's total of 19.1. So whilst tracking adversely to budget, this is a favorable variance to prior year's result. The unfavorable variance includes software licenses, which again is a common theme. It's not something that the council can control. It also stems from pit operations, monitoring, water quality, research and development expenditure, and bad debts written off. Finance costs were actually favorable to budget, and that follows the theme that we've just discussed on the interest rates, because of the interest rates moving favorably just before the end of year. And it's also due to less capital projects requiring finance due to delays or cancellations in those projects. Operating projects were also favorable to budget by 6.4 million. That's an increase compared to last year's total of 13.5. The favorable variance is mainly due to delays and cancellations in projects. For example, there's a digital project of the organizational strategy or computer system development that were delayed, both of them. As already mentioned above, depreciation and amortization, this is still being quantified. At the moment, it is showing a favorable variance to budget. However, the year-end reconciliation and subsequent posting of this value has still to take place. We are expecting to finalize the annual report in line with the audit timelines that were discussed and agreed rigorously, and the first draft is to be made available to the auditors by the end of the month. Please also note that depreciation and amortization is a non-cash expense of non-operating nature. It will not be included in the future operational P&L reports for clarity. Moving on to the balance sheet analysis and position. You will notice a sharp decrease in the rates receivable compared to prior period, as the final quarterly installment of the rates have mostly been received at the end of June. So that is just a seasonal drop. Cash and cash equivalents have increased by 17.4 million since last month, with cash flow used to fund the capital and operational expenditure program. You can also see a corresponding increase in debt position, which was also due to borrowing additional funds to fund the capital project expenditure, as well as the interest rate swap valuations at the year end of 1.7 million. At the moment, the headroom to limit is 118.6 million, and that is staying within our treasury policy. Next is the performance metrics, which probably self-explanatory unless there is anything specific that anybody had any questions on before we move on to the July paper.
Right, we did have some questions earlier. Elizabeth.
Rates penalties. So it's $500,000 for the year, favourable to the budget by 0.1 million, which is a large increase by 0.4 million. I just wanted to know what actually is the rates penalties are for. And you did mention it's 4%, or was it 5%? I got a little bit confused by what you said before, whether we're charging 4% or 5% as a rate penalty. When are we imposing the rates penalty, and how many ratepayers are currently receiving this?
Thank you. So the budgeted number is roughly at 4%. However, we are budgeting it at a conservative end, so we don't expect there to be that many rate penalties imposed. However, the rates resolution that we pass annually, and for the last couple of years, it has stayed at 5%. So the actual is 5, but basically we're budgeted at 4, thinking that there won't be as many late payers. So the penalties are imposed on any overdue rate installments. I'm unable to give you the number just now of how many rate payers that would apply to, so this is something that I will need to investigate, and I will get back to you after this meeting.
Thank you. Deborah, you had a question.
Yes, trying to navigate through diligent and with regards to my query, you said it was on page 34. I don't think we're up to 34 in the finance and performance reports yet. Sorry, around the DCs and the breakdown.
Sorry, Deborah, the dashboards have been added behind the June and July finance papers. So if you want to go and look at the dashboards, if you could just flick ahead a few pages and you'll see that information there.
Okay, can I ask a question on it, please?
Of course.
With regards to the breakdown, and thank you very much for supplying them by catchment areas, I just wondered how I was to read. We got sent out last evening, and thank you for sending it out, a July dashboard, a June dashboard and a July dashboard. And what attracted my attention was in the June dashboard, and I'll only use the springs and looking at the top line, which is reserves, there was a credit of approximately $1 million in that particular month for the reserves. And then I see in July, I go, there's nothing. So I just wondered how I was to read that dashboard. Does that mean that in June, there was $1 million sitting there in the reserves account for springs? And consequently, if we go to July, that money's been spent and we have to start collecting again?
Thank you for that question. So when we look at the July dashboard, that only covers 1 month, and it will be ebbing and flowing as we go month on month. So there will be some numbers that basically are either a credit or an actual number. You will also see that in the June report that covers the full year, which is why it looks the way it looks, basically. Does that answer your question?
Yes, thank you. So one's a full year and the other one's only 1 month. So if that is that $1 million that was accrued for the whole year, has that been spent in July this year?
No. Do you want to take it?
So the development contributions that are shown in these tables are the revenue side when we are actually receiving the development contributions, not the reserves that we hold.
Okay, so how much is collected? Thank you.
Yes, my question is just in regards to statement of revenue and expenses for the year, and the most noteworthy from my appearance of it is the 10 million overspend with other expenditure, and because I think what I understand, the vested assets revenue is still to be worked out, so we can put that aside. So the biggest variance is that $10 million, and you have provided some context there to say it includes software licenses, pit operations, water quality monitoring, and research and development, and bad debts. So of those, when it's other expenditure, and then it's a $10 million difference, are these things that just were unknown? Because I think you did say licensing fees, in particular software licensing, you just have no control over. I would have thought you could budget for software licensing, so.
Yeah, thank you for that question. So the way it's presented, just for clarity, the way it's presented is there are multiple GL codes or multiple expense items that are grouped together just for sake of presentation of this particular report. So we are tracking each of these categories separately. So that's just for clarity. It's not like there's just a single pot where we kind of code all of those expenses. To answer your question about the licenses, we are obviously budgeting, allowing for some increase during the year. So we would say that, okay, so we have this number of licenses. This is the cost that we've had last year. This is what the indication that we got from our suppliers or the vendors, and we apply a percentage on top of it, and this is how we budget for those expense items. However, in this environment, we have seen in some cases license costs increase far beyond what we had budgeted for, and that is just a general theme in the software market where it's all subscription based, and there are a lot of those things just they don't have to give notice to their subscribers, and the costs can increase significantly beyond what we had expected.
Because I can see, so it's not just that it's also a $10 million difference, it's that it's double or over double plus 3 million more than what was budgeted. So how do we kind of prevent that happening in the future?
And Megan, just to add to what Ferranges was saying, so yes, you're right, 10.36 over year to date. It is lower than the other year, but I think it is also just worth noting that when the budget was prepared, it's undoubtedly things were missed from that budget. If you look at the prior year, full year spend of what was 19.1, how did we ever expect to go from 19.1 and set a budget of 6.7? So there's budget anomalies from this year as well. So flowing that into the long-term plan, we've captured what our running costs are and make sure they are reflected in this long-term plan. So yes, Ferranges is absolutely right. Some of the costs have increased beyond what we'd assumed, but I think there is a budget gap there from that financial year.
Wonderful. Any more questions? No more questions on the report. Thank you, Ferranges and staff, for answering those questions. Most appreciated. Can I have a mover and a seconder for item 6, please? Councillor Dean and Councillor Mugford. All those in favour say aye. Carried. Thank you. We will now move on to the organisational projects report. Jen, welcome.
Sorry, Malcolm, I think we've missed the July report.
We've missed the July report, have we? Where was that?
So item 6 includes June and July. We've not covered July.
We haven't covered July yet. Oh, sorry, Jen, we're ahead of schedule. Moving on to July. Lead off, Macduff.
Ferranges, are you and Miller happy just to cover the high-level summary? Yeah, thanks.
Yep, so we'll just cover it on a high level. We'll just now move on to the summary of the financial and operational performance against the planned performance for the month of July. If we look at the dashboard at a glance, the result and the revenue section were tracking behind the budget, and a detailed explanation will be provided further. However, expenditure was also tracking behind the budget, creating a favourable variance to offset the revenue results. So if we look at the overall surplus was 2.7 million for the month of July, and that is favourable to budget by 268,000. Total year-to-date revenue, which now excludes the vested asset revenue, as we discussed in the previous paper, for the period ended 31st of July, that was 16.2 million. And the year-to-date revenue was 1.7 million below budget, with the key drivers being subsidies and grants, development contributions, and fees and charges. So subsidies and grants are unfavourable variance, so they're behind budget due to inability to fully claim from New Zealand Transport Agency until the National Land Transport Program budget is confirmed. So that has now been confirmed, but at the time of preparation and at the time of preparing the July results, that was not available yet. Development contributions are 1 million behind budget, and that's largely because of the Eastern Selwyn Surge Scheme. Wollaston contributions being 1.4 million unfavourable to budget, which is partly offset by the West Melton component, and that is ahead of the budget by 0.6 million. Fees and charges are actually ahead of the budget, made up by additional resource consent fees, additional dog registration fees, and additional dumping fees. So the majority of these can be attributed to the growing population of the district. The total year-to-date operating expenses, which now excludes depreciation and amortization, as it is again a non-cash, non-operating expense item, for the period ended 31st of July were 13.5 million, which is below the budget by 1.9 million. If we look at the unfavourable variances, they are maintenance expenditures. Maintenance expenditure, which is 248,000 unfavourable to budget, with transportation maintenance being over budget by 0.4 million, and the traffic service maintenance is over budget by 0.3 million. And that is due to a higher volume of drainage, sealed and unsealed road maintenance. So again, that can be attributed to the growing population of the district and the growing usage of the facilities and the therefore requiring more maintenance. Consulting fees, they are 570,000 for the month, which is over budget slightly by 94,000. The majority of that relates to digital. There are further consulting fees over budget in the building and resource management teams, but that will be offset because these are directly recoverable through increased building and resource consents. Net finance costs are 1 million for July, which is an unfavourable variance due to higher than expected interest on borrowings. The favourable variances, in turn, are operating projects, which are favourable by 1.5 million. This spans the majority of the projects and is expected to catch up to budget in the subsequent period. So it's just a timing difference at this stage. Other expenditure is favourable to budget by $0.5 million. These favourable variances include budgeted amounts for monitoring water quality, general expenses, donations and grants, and building authority levies. It is expected that these expenditure items will also be incurred in the coming months. So again, it's just a phasing issue. Personnel costs are 3.6 million for July, which is 0.3 million favourable to budget, and that is because of the annual remuneration review process was not yet finalised at the time of preparation of this report, and there will be a catch-up in the August report or the August result. Capital investments in assets and infrastructure, it totals 4.1 million for the period ended 31st of July, and that is less than budgeted by 9.2 million. The capital projects report will provide further details on that. The balance sheet summary is very high level at this stage. The cash and cash equivalents have decreased by 4.7 million since last month. The cash flow was used to fund the capital and operational expenditure program. We have seen the increase in the receivables by 14.9 million since last month. And again, it's in line with the expectations for the fluctuation with the rates installments. So it ebbs and flows through the year, depending on the installments that are due to be, that have been billed and are due to be collected. Payables of 50 million have seen an increase since last month, and that is mostly relating to trade payables and the holiday pay accrual that has been carried. Debt position for council's external borrowing that has remained unchanged since last month, so there were no extra borrowings. The external borrowings are sitting at 185 million, and that is offset by interest rate swaps of 5.4. The headroom to limit has not changed since June 2024, and we are within the Treasury policy limits. Property, plant and equipment appears to have fallen by 91 million since last month. However, this is due to work in progress for the financial year not yet being capitalised as a part of the annual report process and will be captured as a non-current asset rather than being accumulated funds in equity. Key performance indicators are now being reported quarterly by program and performance team. So that section has been made redundant from this report going forward. Are there any questions on this?
Sorry, if I can just add one
Yes.
thing to that report as well. Just within the consulting fees, I mean, Ferranges has noted the adverse variance just now, but just noting the digital, where 92 of that's attributable to the variance, we do need to move some of the project costs. So within Matt's area, we've got the digital project that was approved through the long-term plan. Some of the items just now have been coded to consultants that will be offset again, so it's not a negative variance. We will just be moving some of the numbers around. And I think just also noting on the debt, our debt position hasn't moved, but we've also hired a new capital and projects accountant, Peter, who's over there in the corner. So we will be working with Peter, Tim and Kamal and the wider team to make sure our borrowing is in keeping with the capital programme as that progresses.
Thank you, Alison. Any questions? No questions. Welcome, Peter. Good to have you on board. Well, we did move the June report previously. We'll now move the July report.
Just got a quick comment to make before I can. I'm happy to move. Just wanted to say thank you for the dashboards. They look really good. Yeah, really nice and easy to follow. So as a one-pager, look at. It's absolutely brilliant. Thank you. I know there's a little bit of work that went into that, so I'm happy with it.
Thank you, Councillor Dean, for moving that and your comments. Seconder, please. Elizabeth, thank you for saying that. All in favour say aye. Thank you. Now it is your turn, Jen. And Kamal, I didn't see you arrive.
Kia ora koutou, good afternoon. So Kamal and I are going to co-present today the Organisational Projects Report. Today's report provides an overview of performance as of last year, so to the end of June, and I'll also provide a brief update on how we're going in July as we start the new year. I also just want to note as we move forward is that the report is written at a point in time. There may have been some movements or progress on some points since the report has been written. I will look to highlight these for you as we go through. So I'll start with the last financial year and a few points to highlight. We did improve on our carry forward position, which can be attributed to the progression of a couple of our big major projects, completion of roading projects and extension of the payment claim period. The teams overall last year delivered in the vicinity of 150 projects, varying in size, and also right across the region. So we've got some of the large ones of note. We delivered Rolleston Pool, Rolleston Reserve. There were some recovery park enhancements, Pine 60, as well as making some really good progress with the minor works, roading, libraries and pools budgets. You'll notice on the graph, that small graph on page
35.
Yeah, 35, thank you, that you'll see a good lift in productivity from February to June. So that's been really positive as we've moved through the year. The forecast line in orange just sort of shows that we've been pretty much delivering consistently with how we have been doing over the last 5 years. During the LTP process, we did have quite extensive discussion with the CapEx doability and the reasons for the delta between the planned and the actual. So as you'll be aware from those discussions, there are various factors involved in that. We do continue to look forward and make a step change in how we plan and deliver our work programs as an organisation. And at the end of the report talks to some of the key initiatives that we've got around strengthening our capability, some of which we'll talk to you a little bit more about soon. I'd like to reinforce that as we go through these programs and look to uplift our productivity. It takes a whole organisation response. Each part of our organisation has a role in how we program and deliver. So we need the technology, we need the frameworks, we need the assurance, performance monitoring, planning, finance, capability development. So it all works together doing their part to deliver this. It doesn't sit with one team. Kamal, I'll just invite you. Is there anything else that you would like to add to this?
So, thanks, Jen. So as per page 36, there's a bit of a total there of 9.5 million, where 4.7 was unplanned work due to emergency works that were done. There's 1.5 million approximately from the tourism infrastructure funds and building fit outs. And there was about $3.3 million worth of what we said unplanned spends, but that was more upon further investigation, that was more of based on the accruals and the carry forward issue that was based, because at a certain stage earlier in April, we would put in the accruals information that's required and we expect the projects to be complete. But this year we extended the timeline for when accounts could come through and reduce the amount of accruals, and that really assisted us. So the 3.347 million that is stated there is more of a timing issue of how we represent information. It's not a budget issue. Thanks.
Turning our attention to July 2024, So our spend in the system at the time of reporting was 4.5 million. This does look somewhat low comparatively to the prior months leading up to the end of the year. Look, an early view of the August figures, which is just sort of an early indication as of Monday, is that we did have a number of accruals that can be attributed to the July result. So I do anticipate the July figure to be higher the next time we produce this report in time for the November meeting. As we were producing the report, the teams have been working on project phasing, which is why we have not included the forecast actual as a visual for this particular report, because it's just very linear at the moment. It will be in the November report, and we'll look to also include a summary of all the projects that we have delivered within the starting months of the year. Kamal, once again, is there anything you'd like to add?
Thanks, Jen. So, as further reported in this report, and what we'll be discussing further, is the financial sanitization process is still happening. We are also updating our new and improved project management updates, which is called Apex 2. It's a internal software. So where all the project managers are updating it with forecasts for each month and anticipated. So once that gets formed properly, entered in and baselined, we'll be able to report further information. Thanks.
So I'm going to piggyback off that as well, because actually one of the really cool things that's been going on in the background with the teams is the development of Apex. It's quite exciting and the work is progressing really well. It's really, it helps us move away from a spreadsheet-based system, and it will facilitate good improvements in terms of transparency of performance, which will aid both reporting, assurance functions, and also leaders in their decision-making process. But it's been a great piece of work, and I just really want to acknowledge the digital team, IMP, Finance, and our project practice lead for the work that they've been doing in this space. It's mobilised quickly, and it's developing well. On the back of that, we're going to be developing some capability to produce a master project program of work. What this will add initially, that we'll see immediately, is a time element. So not just talking about spending money as a measure of performance, but also how we're progressing to program. Over time, there'll be other components we can add to this, such as location, resourcing. So it will be really positive in terms of our ability to capacity plan and prepare how we deliver to our projects, and also give us insights to if there's anything that we need to address during that process. So the project side of me gets a bit excited about that sort of stuff. So it's a really good progress. Look, for this report, and I note your comment, Phil, about the dashboards. Look, we're always looking to improve, and as we get more information and data that's going to come through the improvements that we're making, we'll be able to add in a lot more visuals to these reports moving forward. I'd like to see, to Mason, if there's anything on that reporting front that I haven't touched on that you'd like to elaborate on.
No, Jen, I think that was good. Probably just to... I guess a master program is really important. We've got a significant program of work here that's super complex, and the tool that you would typically use in order to manage good performance around time management is a program. We simply haven't had that before. Program also enables you to benchmark projects, enables you to cost load projects. And I guess what that means for you guys from a governance perspective is it means that we can get a clear view on what our forecast spend is over the next 12 months. And the reason that metric's important for you is if we're forecasting to spend $10 million in August, and we come to this Finance and Performance Committee and we've spent $5 million, straight away you know that there's something not right. And that drives some really healthy conversation around, well, why have you only spent $5 million when you forecast $10 million? It's a really fundamental tool for complex program management, and we haven't had it in place to date. So I'll probably go a step further, Jen, and commit to having some of that reporting in the next Finance and Performance Committee report. And what it also does is it enables us to generate some much better reporting too for you. So, Councillor Dean, there'll be lots of pictures, lots of tables, things like that, which really simplifies a complex set of information. So we've got Frequency in to do that work, and they're going to have a first cut of that master program in 2 weeks. So I'm expecting that we'll be able to give you some visibility of that, what the reporting would look like, and what kind of information we'll be able to provide off the back of that for the next report. So yeah, I agree with you, it's quite exciting.
Great, thank you. I just, moving through the report, there are a few other points to highlight for you. Local water done well. Obviously, we've had a better funding program now complete, so I will finish reporting on that in this report moving forward with other mechanisms in place. There is one deliverable that remains within that program, which is the Cycleways feasibility report, which is due to be presented to Council before the end of the year. Major projects, you'll see a slight change in this program now. The report is titled Organisational Projects, so we are sort of starting to extend out further than the IMP projects, which has dominated a lot of this reporting moving so far. What we've done is we have started to keep a highlight on the big decisions and the matters of community interest that we consulted with our community on in the LTP process. So we've added those in. They do look good, green and good and great at the moment. We are 1 month into the year, so but everything's all good on that front. I'm going to invite Kamal, who's going to take us through the IMP projects that are on that major projects list and just give us a brief update on those.
Thanks, Jen. So this is regarding on the table on page 37 at the bottom. There are a few minor corrections.
Your numbers are 3 numbers higher than your numbers. I've just worked out the code.
Right, thank you. So there are just some minor corrections that need to be put into the table, and I'll just walk you through those parts. So it's the Pines Wastewater Treatment Plant, which is the first line. The budget that is shown there is till the year financial year 26-27. So it does not indicate the full budget that's indicated in the long-term plan, but a schedule of works that is to happen. So it's approximately 9 million that needs to be spent on this year in terms of the inlet works, the solid stream management, and irrigation upgrades. This budget will continue till 26-27. So basically that means that the dates shown there should be June 27. That's the planned and the estimated. So that's just a correction, if you can please note on your notes. The Prebbleton roundabouts, there's been some good news. So in terms of if everyone's seen, the Shands Hamptons roundabout is open to the public, and we're expecting the Shands Trents to be fully open by November 2024. So work is progressing, and that is assisting. We've still got 2 properties that we still need to finalize aspects on in terms of funding. So that is per plan. The Prebbleton Reservoir and pipe work, which is in terms of the water works that needs to be done. There's a small correction in terms of the estimated completion, and that we're still expecting between April and June. So we're trying to complete it earlier. Our contractor is working diligently on that aspect, and hence we are hoping that we can put that earlier through, but we'll see what time progresses with. Lincoln Reserve extension, that is still being done in terms of design. Whararo is still work in progress in terms of what needs to be done in terms of community discussions. The Ellesmere to Pines wastewater pipeline, that is progressing really well. There's a small correction in there. Rather than June 26 on both planned and estimated completion, it should be December 25. So we're expecting any time between June to December 25, but we have tentatively said at the moment December 25. They are working, our contractor is working currently in the Leeston area, and they're progressing well, but we are expecting at some stage that we will be hitting high groundwater. So that needs to still be taken into consideration. So those are some minor corrections on that page. In the future, we will be reporting on other projects that have started, such as Levi Road intersection upgrades that is happening, the Lincoln Town Centre Stage 1, Lincoln Reserve extension that will be coming through, and Foster Park. Thank you.
Okay, one more area that I'd just like to touch on before we finish up is the risks, issues and assurance. So we have started a program of project health checks. These are quite operational in nature. They focus on the project themselves and the systems and processes we have in place to support delivery. They are a point-in-time evaluation of the project against our project management framework, which is designed against best practice. The health checks, the first one that we've done is on Ellesmere to Pines. The recommendations outlined in the report are really focused around operational improvements, including our project management, and that's more the processes that we go through and follow, and our record keeping is an area that we can uplift. Updating an updated program forecast from the contractors was another point that we also raised in that, and this will help better inform our budget projections over time. From an assurance perspective, we look to be doing the health checks more from a central perspective every 3 months, but we do give the tools and the templates to the project managers. So what that does is it helps us get a much wider assurance arm across the organisation just to keep our processes and our practices consistent and in line with good practice. We will do PIRs from time to time. There is an appropriate place to do them. They're particularly useful when we have what I'd say is probably quite a tricky project that we need to learn from. We don't have one currently planned, but we do anticipate that we will do some in the upcoming year. Not saying that we're going to have any tricky projects, but it's like we'll have a PIR. So those were the points that I wanted to highlight from the report today, and open to questions. Thank you.
Thank you, Jen. It's certainly good to see us working across the organisation and improving what we're doing. And it's I can see you're at the apex of your excitement. Elizabeth, you have a question?
Yes, if I go back to my page 39, where you've got here roughly 4.7 million of unplanned spend attributed to emergency works due to flooding. In terms of the emergency works due to flooding, I would have anticipated that we had a separate fund set aside, ring fence for emergency works. Do we not? Is it that that's an additional cost to us that we don't budget for? And that seems quite a lot of money. We haven't had much flooding this winter. Is that an overspend from last year, or how does that come to play, the flooding costs?
As far as I'm aware, there is no budget, but I'm happy if Alison or somebody else wants to correct me on that part.
We don't make a provision for emergency budgets. It's dealt with at the time related to each scenario because it can be a little bit different.
Yeah, we've had some serious flooding issues. I know of Rakaia, but I haven't heard of any others this season, this winter.
Sorry. I'm happy to expand on that. It's not, it should be a bit more. It's not only flooding, there's other aspects such as Port Hills fire. There was some minor amounts in flooding. There was also in Glen Tunnel, there was a flood event that was worked through. Some storm damage events that did occur in July. Mm-hmm. So there are certain little aspects that did come through and that did get added on.
Right, okay. In terms of the tourism infrastructure funds, I just wonder if you could elaborate on how we've incurred the unplanned spend on that. Thanks.
It's normally based on reimbursement.
Excuse me. So normally the TIF fund we have is normally a spend and then reimbursement, but council normally covers half of that cost. I'm not sure what we're shown as unscheduled spend though.
I'm wondering if is that the toilets, public toilets?
Yeah. Majority of it is public toilets across the district.
Okay. Right. So what does that actually mean? Because we budgeted to spend a certain amount and then we expected the TIF fund to spend the other half. Is it the fund? Are you saying that they didn't come to the party and we've paid the full price for the toilets? I'm sorry, I'm just a bit unclear on how we've had a big overspend on toilets.
We can have another look back at it and come back to you, but it could possibly be that we hadn't actually got the invoice through or funding back from them for that point. So it might be showing as an overspend. So their financial year doesn't sit the same as ours. So quite often the project will start halfway through our financial year and go into another one.
So there's no problem with them having revoked their agreement to fund it. It's all coming through.
No.
Perfect.
Sophie.
Kia ora, team. Just a small question, really. Also, page 39, we've got the mention of the Leaston Health Facility Feasibility Study. I may have missed it, but I don't think that report's ever come to council. I'm just wondering, it probably doesn't need to be actioned by council because it was with Friends of Ellesmere Hospital, and that's great. So I'm just wondering if it's available to the public anywhere, because it's not noted in here somewhere.
I can actually respond to that. We've asked for a presentation, and I think it might be October or November, because council funded the money for the feasibility study to get an understanding and update as to where we've got to. There's lots of conversations going on in the background, and also as we get into Whatarau, there may be some opportunities just wrapped up in that project. So there's lots to unpick and unpack, but we're hoping to see the presentation October, November.
Thank you. Any more questions? Being no more questions, thank you very much, Jen and Kamal. I'm very pleased to see that Apex is doing the trick and some new digital communications throughout the council. I'd like a mover and a seconder for the report 7, please. A mover, Bob Mugford, thank you. And a seconder, Sophie. Thank you. All those in favour? Aye. Thank you very much. We'll now move on to the financial hygiene project presentation. I hope Matt's washed his hands.
You're in fine form this afternoon, Deputy Mayor.
You reiterated what I was thinking, Sharon. Good afternoon, Mr. Chair, councillors. I'll just get the presentation up. So I take it the folks have read this, but I'll just provide a bit of a summary. Thank you. Okay, just as a reminder, the funding for this was actually from the LTP under Enhancing Customer Experience through Digital Solutions, and it refers to the large tranche of work that we've begun under the digital strategy. Council's in year 1 of the digital strategy now, and the year 1 or phase 1 is what we call getting the basics right. So currently the business struggles to see operational and capital expenditure on a timely basis, which puts us at risk. But there's also lack of transparency and reporting, and we need one source of the truth. The overall plan is to tidy up the current system, our system Magic, create a manageable internal control framework, and reduces the organisation's risks within the confines of what is configurable within the current system. So we'll reconfigure Magic to a new chart of accounts. This is so it's aligned to potential new financial systems. This will be beneficial as we move into the next phase of the digital strategy. It's better to do that now so we avoid higher costs and greater organisational disruption when we move to a new system. So it's sort of a fix it up so we don't move our mess into the new system, so to speak, but also relieve a lot of the frustration and challenge across the business around reporting. We're also, as part of this, providing the business with operational and capital expenditure dashboards. This is filtrating down through heads of department. And more importantly, though, this is a change in culture, which the digital strategy is bringing about.
Matt, sorry, your slides aren't going through on the, I'm just thinking for those people watching.
Okay, sorry. So I'll just flick it through slowly. I'm just sort of summarising as we go. So look, there's a major component around this, and it's a cultural change. So I'm talking about tools, systems. There's a cultural change across the organisation, and that will be knowing and being accountable for your numbers. So you'll see slogans, know your numbers, moving forwards, which is a bit of a change within the culture of the organisation. As part of it, because Magic doesn't have the capability to put a lot of these stage gates in, we'll be governing and updating, policies, procedures, and putting in some alerting. And I've provided a bit of a high-level plan. I'll just flick to that at the end here, just to give you an estimation of timeline that this is not a quick project, and we have to keep very mindful of when financial years change over. So that's just a bit of a summary. So I'll just take any questions myself or Alison can take.
Yes. I'd like to just add a bit more if that's okay. In terms of one of the frustrations we've heard from team members over a number of years from feedback via surveys is the frustration around our lack of digital visibility of our financials, etc. So as councillors supported the long-term plan and the investment, this is starting to bring it to fruition, which actually will make life easier for our team members to have that visibility of the data, and that will be combined with some support through financial business partners. And what we're wanting to do is elevate the visibility of financials. And when we talk about culture change, what we actually mean by that is that this is really exciting for our teams to be able to have that information hopefully now at their fingertips, which is quite a big shift forward, and I know many of the team are really embracing that opportunity.
Thank you, Sharon. I think the previous slide gives you an idea of the various areas you're looking into. Well and truly overdue, and go with good speed. Do we have any questions? Elizabeth.
Sorry, I don't know anything about tech, but I just wonder if you just elaborate on what data migration and cleansing means. There's quite a bit of time there in November, the whole month is blocked out for that.
Yep. So we have to, Magic in its current state, we can't touch, folks are using it. So we'll have to, as part of this, we'll have to create the new chart of accounts in a second instance. And we will then need to basically take the good bits, so to speak, and migrate them into the new chart of accounts. And then when that's all tested, and it'll have to take months to test it because this is so important. The finance system is the DNA of the organisation, so we have to get it right. Once it's tested fully, then we flip it over, and that's where you'll see, I'll just flick over the slide, that's when you see like go live preparation, and then go live, and then post go live support is a whole lot of support we'll put around staff with the finance business partners and the digital change management team to make sure that everybody's comfortable using the finance system in its new configuration. Does that answer your question?
Yes, it does. With that, with your proposed model, I think you've spoken a little bit in the past about people being able to come in and use the website, and they can see where their consent's sitting. Is that correct? Mm. So are people able to come in and see day-to-day detail, like when their next rates instalment is and things like that on a personal level, or not so much?
We haven't got there yet. This is getting the basics right first. So no, they won't see any change there. Where they will see this change is that the staff will be able to go about their tasks quicker because they'll get their financial information quicker and be able to get back to residents and partners quicker. But what you're talking about is coming in the phase 2 and phase 3 of digital. Sharon.
Yeah, thank you. Elizabeth, at some stage in the future, Matt will be doing a presentation back to councillors about the digital strategy and the phasing. and again, looping in around the rest of the organisation. So with Emma and the Resource Consents team, I think Emma touched on that last week, around hopefully by October we'll be in a position to have additional information onto the website. With regards to your other question, it's really about simplifying. So from a GL code point of view, Alison, how many codes do we have?
So we've got in excess of 22,000 just now. If I dial back to other organisations that I've worked in, we've had somewhere between maybe 300 and 600.
Yeah.
So most of the GL codes we've got are legacy project codes. So we treat a project as a GL code. So if we go back to Tim's comment earlier around how can we report, we want people to be accountable for their numbers, but you have to be able to provide those individuals with their numbers, and we can't do that on a timely basis. So part of this is dialing back that 22,000, making it clear for when a person codes something, it ends up in the right place. We can report to them on a timely basis so they can see what's going on. And I think putting a little bit of an internal control framework around Magic as well, making sure who has access to what is right and fit for purpose. Sorry, I'm going back to my old audit days a little bit here now as well, but Magic has not been maintained well by the organisation for a number of years. And to Matt's point, this is dialing it back, getting the basics right. Ultimately, we may move to a new ERP, but we can't do it in its current state. We need to tidy up our own backyard first.
Thank you for that clarification, Megan.
What's ERP? What?
Enterprise Resource Planning.
Okay.
Yeah.
Well,
yeah.
My comment was actually on those GL codes, like 22,000. I've never seen anything like it.
Oh no!
Anywhere.
It's very special. Yeah.
Right. And so my question was going to be, like, who will have authority on who can create a GL code? Is there going to be...
So that sort of goes to the segregation of duties. So each role, if you think about my role as CFO, I should be able to go in and view things, make some changes to things, but I shouldn't be allowed to set up a whole new bunch of codes and GL codes, and also who can raise a PO, who can approve a purchase order. So it's dialing that back, looking at who uses the system, what's the purpose of what they're using the system for, making sure their permissions are correct and fit for purpose. We don't want to make it difficult for people, but equally you want some controls around it as well. So it goes to the whole getting the basics right.
Yeah, I know Sharon sometimes described it as, oh, I've got a bag of squirrels going on here. It's actually a bag of bolting horses. Yeah, 22,000.
Yep, there's squirrels, there's hamsters, and there's quite a few other creatures in there.
Which is why we'll have a party where we get rid of 22,000 GL codes and bring it down to something that is reasonable and manageable. And again, this is about all part of our internal and external customer service, about being able to get information in a timely way. And Alison's really quite correct too, around putting some parameters in place. We're not happy with the internal parameters as they stand at the moment, and we've got some opportunities to strengthen that. So that's all part of what we'll be doing, and we look forward to actually coming back and giving a presentation to councillors when it is appropriate to celebrate and talk about what we're doing, because actually as governors you want to have confidence about the systems that we've got in place and the parameters that go with it.
And I can honestly now stop and go, I should have given more praise to the last report, knowing that there's 22,000 codes that they have to sift through to get the information. So well done, Kamal and team.
Thank you for the bouquet. Sophie.
Yeah, just so obviously this is going to make it easier for staff. We're going to get better reports. You're going to be able to feed back to public when they're asking questions more easily. Is it also going to make life easier with Audit New Zealand?
Yes, it will. So if we think about the chart of accounts, it flows into a trial balance. There's a whole myriad of things that goes on between A through to Z. So if you dial that back, there's less noise for not just the in-house team, but for auditors to look at as well. Yeah.
Wonderful. Any more questions of Matt? No more questions. Thank you, Matt. Have you finished, or are you going to?
Yes, I have. Thank you.
You're not going to reboot us or anything? No. Okay. Thank you for your report. We will now move to